Is a huge market rebound incoming? That's the question that we have to ask ourselves right now, because we are absolutely for sure in a downtrend. Your 10 is under the 20, prices under the 50. Now, I saw this video is popping off on YouTube, so I want to watch it with you. This video is called "A Huge Market Rebound is Brewing. Stocks could soar from here." Now, Joe, before we get started here, one thing that I really care about is making sure that we don't make predictions and that we just follow the trends in front of us. When I saw the title of this video, very controversial. Where do you think he's going here? I'm just curious what you think.
Well, being a dip buyer is a tough road to hoe, right? You don't know where the bottom is. You know, it's a market that most likely is going to rebound, but you don't know when it's going to start. You don't know at what level it's going to start. And as a trend trader, you need to follow the trend. And if the trend hasn't established going up, it's kind of gambling. You really need to look. You need to follow the signals.
Right. And to go along with what you said, you just don't know how far the dip is going to dip. Right. You don't know how long the dip is going to dip, but you use the trend template like I just described you a moment ago. You will be on the right side of the trend no matter what. So let's watch this together. Let's learn about the huge market rebound that's brewing. Stocks could soar from here.
But all of them missed the one quiet event that actually moved the entire market this month. And once you see what really happened behind the scenes, you're going to understand why this volatility is temporary and why it's setting up what could be one of the best opportunities we've seen all year. Unless you've been living under a rock, you know it's been a pretty wild month in the stock market. And yes, we're only halfway through it. November is usually known as a calm, friendly month for stocks. Historically, this goes back to 1927.
You know what? I love a good seasonality chart. Pretty interesting here. S&P 500 monthly average returns since 1927. November, a pretty good month, right? If 1, 2, 3, 4, the fifth highest month on average. Oh, that's pretty cool.
The S&P 500 has closed higher in more than half of all Novembers. And in the first year of a presidential cycle, the odds jump even higher. Even when the market enters November with a big year-to-date gain like we have now, it usually finds a way to tack on another couple percent. So on paper, this month should have been smooth sailing. But instead of that steady climb, we've seen markets swing around like they're trying to find their footing. And every day we get a new storyline trying to explain it. Is it the AI bubble? Is it the government shutdown fears? Is it Burry short sales? Is Peter T.
I like this. I like this point, right? People want to put whatever narrative around what's going on in price. We won't actually know what's going on in price until maybe later on, if we ever know. And it really doesn't matter, right? People get greedy, people get fearful. When one thing outweighs the other, people push the sell button or push the buy button. Right? At the end of the day, that's all that it comes to, right?
Selling spooking investors. The headlines have been nonstop, but here's the truth. None of those were the real problem. The actual driver was something far less dramatic, but far more powerful. A short-term liquidity squeeze deep inside the financial plumbing. And once you understand it, the entire month suddenly makes perfect sense. It actually becomes a lot more optimistic than it is felt in real time. Now, to understand where things went sideways, you need to know what SOFR represents. So SOF.
Oh, I know SOFR. Back when I was doing consulting, right? That's an overnight rate that you could, you as an institution could deposit your funds into. Now, this replaced LIBOR. I don't know if you heard about LIBOR, but LIBOR was a place where you could deposit your funds into. Joe, like right now, right when we're sitting in cash and not effing up, feels good sitting in cash at 4.3% in SGov, right? Well, institutions need to drop their cash places as well. So LIBOR was on the books forever, and then it turned out LIBOR was being manipulated. So they axed LIBOR and replaced it with SOFR. There you go. I don't know if you knew this, but that's part of my consulting because I'm actually a finance guy. I am a real finance bro.
No, I had never heard of that.
Yeah. Oh, yeah. This is a big deal. Huge deal.
The overnight cash rental rate for major institutions. It's what banks and funds pay when they need to borrow money for just one night. Now, normally, in a system with plenty of liquidity, SOFR stays calm, consistent, almost always below the Federal Reserve's own floor rate. That's the sign of a well-oiled machine. But this time, something snapped.
When I'm watching the TV, I'm sitting on the sofa.
Well said.
Heading into the end of November, SOFR shot more than 30 basis points above the Fed's rates. This is a rare and alarming sign. A move like that tells you one thing. The big players suddenly needed cash and there wasn't enough available. Moments later, we got confirmation. The Fed's standing repo facility, which is basically just like an emergency outlet for overnight borrowing, was tapped for more than $50 billion. Now, that facility, the repo.
Okay, I was going to say, where's the source? Source New York Fed. Now, Joe, I worked in the consulting realm for a dozen years, right? I worked hand in hand. I made you sell your sofa, right? I worked hand in hand daily with executives at financial institutions, mostly credit unions, and I'm very curious, insanely curious, if he can give an answer as to why this is popping up the way that it is.
Barely gets touched under normal conditions. When SOFR breaks structure, the repo window lights up. You're not looking at speculation or headlines. You're looking at a genuine liquidity pinch. But here's the silver lining. Liquidity events are temporary. They are mechanical, not emotional. And once the pressure releases, markets tend to recover faster than most people expect.
It's the emotionality that drives hang on, Ross, my friend. The reason that there's a liquidity crunch is because somebody got emotional that they were going to lose their money, which caused them to go need their deposits, which caused the institution to go to the repo market so they could get the funds to fulfill those obligations. That is extremely emotional.
So what caused the sudden cash shortage? Well, it wasn't one thing. It was multiple drains, all pulling money out of the system at the exact same time. First, and the most obvious one, was the government shutdown. Now, this forced the Treasury Department to build a giant cash buffer. So when there's uncertainty around these funding deadlines, they don't know how long the government's going to be shut down. What the Treasury does is stockpile money in its main account of the Fed. This is known as the TGA. And that balance surged to nearly $1 trillion. Now, most people don't realize this, but every dollar that moves into that TGA account is a dollar that leaves the private banking system. So when the TGA balloons by hundreds of billions, or in this case, $1 trillion, that is a huge hit to market liquidity. Then you layer in quantitative tightening. The Fed has been shrinking its balance sheet for 2 years. They've removed more than $2 trillion out of circulation. Now, earlier in this cycle, that wasn't a problem. After all, we've been in a bull market, and the reason is the system still had extra cash laying around, sitting unused. But that cushion had now evaporated. So now each dollar the Fed pulls out comes directly from the parts of the system that matter most: the banks, the funds, the repo markets, and ultimately stocks. So what we ended up with was a Treasury hoarding cash, QT still draining reserves, and excess liquidity that was fully depleted. It was the perfect recipe for a short, sharp squeeze. But again, these squeezes don't last forever. When liquidity flows back in, markets usually snap back, often stronger than before.
I don't know. I feel like he doesn't know what he's talking about. Now, granted, he may know everything to a T, but I'm not seeing how he's connecting the dots. From somebody who worked in the industry for a dozen years, I'm not seeing how he's connecting these dots to get to that point. And I'm certainly not seeing how, that means stocks are going to rip higher from here. I don't know. But Grant, I don't know what I'm talking about. I'm just a random guy on the internet.
So once liquidity tightened, funds that rely on leverage, this is hedge funds, quant shops, CTAs, the big guys, the cowboys that trade a big leverage, they had no choice. When funding costs rise or liquidity dries up, they must reduce exposure. Not gradually, not next week, now, immediately. And here's the key. When this happens, they don't sell the stocks they want to sell. They sell the stocks they can sell.
Okay, I think he's off the reservation. Most institutions cannot own stocks. Period. Full stop. You know, Joe, do you know why an institution can't own stocks?
No.
Market risk. Imagine that you are an institute. You're a $100 million institution. You've loaned out all kinds of money to people, right? Mortgages, auto loans, etc. And they then you also put some in stocks. Well, what if 20% of your credit union's net worth is in stocks, and then those stocks would go down 10%, right? That means you're losing a huge portion of the equity of your institution because of market risk. So they're not allowed to own stocks. I think I've seen one institution ever that had a special exception to own stocks, and I looked at 11,000 conservatively. And I can tell you for sure, JP Morgan, all of them, they don't own stocks. I mean, they may in their investment funds, but not as the institution. Does that make sense? Those are two different things here, right? The
Okay.
institution has to be able to balance one thing or another based on their loans and their investments. I mean, when you look at a balance sheet for an institution, right? You've got investments and you've got loans and then you've got cash. Those are your three asset categories here. Your liabilities are all the money that you took in from your depositors, right? All that money. And so there's really not any place for a part of their asset book to have market risk associated with it. Those investments, they try exceptionally hard to make sure that the investments that they make are as low risk as possible. They have regulators, they have auditors, they have full teams of people that say, if you want to keep your FDIC, your SIPC, your NCUA insurance, you must have this amount of risk on your balance sheet. There is no place for stocks on those type of balance sheets. Now, their investment funds are different. That is not part of the institution, right? The depositors, right? That is a special group within the institution specifically for trading. That's not what we're talking about here. Very interesting. However, I do not see how he's making this connection from one to the other.
That means the most liquid names, your big mega cap techs, your Apple, Nvidia, Google, Amazon, these are the ones that get hit first. Not because their fundamentals changed, not because investors suddenly hate them, but because they are the easiest assets to unwind quickly. And that is exactly what we saw. The big dips came from Nvidia and Palantir and Microsoft. Those stocks are such a large weight in these indexes, it dragged everything down with it. I commented in a video earlier this.
Hold on. I want to go to the S&P 500 map. He's not wrong on that, right? Because the way, hang on. The way that the market works is it's a market cap weighted index, right? And because it's a market cap weighted index, you can dream wildly and invest wisely. ETFs for dreamers who like to plan. You can go to like the 1 month performance and you can see, the big guys right here, they have an outsized impact. Like Microsoft going down 8% is greater than all of the consumer defensive, including Walmart and Costco. All of that is less than half of Microsoft. Microsoft going down is greater than the entire industrial space right here, like GE, Raytheon, Boeing, Lockheed Martin. When these names start to go down, that has an outsized impact on the market. Now, granted, I don't think that he knows what he's talking about in this case, so we're not gonna give any more airtime to this. But I will say, I did notice his watch. Did you notice his watch too?
I did not.
Hang on, I'm going somewhere with this. I'm trying to lead us somewhere here. You'll see. Oh, there we go. Hey, that's a nice watch there. Kind of looks like my watch. You know what, Joe? I love nice watches, and that's part of being an outlier. Is that you can make money to go out and buy fancy watches. And if you are the kind of person who already has fancy watches, then Outlier is great because you probably have enough money to invest. So Outlier works on both sides if you like fancy watches. And you know what I like more than fancy watches? I like watching fancy watch podcasts. Now, what's really cool is we have already partnered with this podcast, Pull the Crown. We are advertising in both of these two podcasts right here, but we just signed a new podcast, Jag's Watches. I met with Jag last week. I'm going to meet with Jag here in another week or so, and I'm going to teach Jag how to trade plan ETF. And what I want you guys to go do is go watch one of Jag's videos. He's talking about this watch here. It's only $299. Or maybe you want to watch this video about how Rolex controls you, and I want you to put hashtag OVTLYR as one of the comments on his videos. Be super cool because we want to show him some love, right? We want to show our partners like Jag and others some love. Hey, IB Shorty just watched the one yesterday on Pull the Crown. Very cool. I was watching that while I was walking around Costco. Yeah. So either way, I want you guys to go and support Pull the Crown and support Jag's Watches, and be sure you subscribe as well. Hang on, I'm on my my dummy account that's got only finance channels, but I'll go ahead and subscribe on this too. You guys go support them as well. So Joe, let's take a look at the market, right? Rather than saying some cockamamie story about I gotta tell you, I just don't think that guy knows what he's talking about. But granted, I could be 100% wrong. And if Ross Givens wants to show me the receipts on how it works, by all means, that would be really cool. I think that would be great. But what I saw in that video, I was not convinced by. But welcome to the Outlier Trading Room invitation only live stream. This is where we help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. Now, Plans M, A, ETF, and sit in cash are what we normally look at. And if you want normal returns, this isn't for you. But if you want outlier returns, you're in the right place. So plans M and A are our two most aggressive plans, and they start with the market. So let's go look at what the market's telling us today. So the SPY having a bullish trend is our first component as far as getting long in the market. And no, it does not have that. In fact, we have a bearish trend. 10 is under the 20, prices under the 50. And you can come up with whatever cockamamie story about how the market's going to bounce right back up. But for right now, all we can see until we get the Nancy Pelosi upgrade inside of TradingView, until that comes, all we can see is a 10 under the 20, price under the 50, meaning it is a bearish trend. Mathematically speaking, like Brian's saying right there is nothing that you can prove otherwise, because it is just math. It always works every single time. So we're in a bearish trend. The SPY, I don't even have outlier open yet. The SPY is sitting on a sell signal. Pull that right there. SPY is sitting on a sell signal. And if we pop into SPY, we can take a look at the fear and greed heat map, which has gone under 70 and is falling. Here we go. Falling. And that's great. That is great. Joe, why is that great that it's falling?
It's been elevated for so long. I mean, I think it was even approaching 80 at some point, right? And the window is so small for the plans to activate and give you a window to get in, that the lower it gets, the better it is for our plans to have, that runway.
Exactly. Because we want to see the fear and greed growing. We want the market to get more and more greedy. And that gives us more runway, to Joe's point, right? If it's at 56, we got a lot more runway versus 66. But we're not going to tell it when to stop. People are getting more and more fearful. Let them get more and more fearful, Joe. Let them get all the way down to 0. We'll be ready once it turns around. And looking over here, the breadth. How many buy signals do we have to this sell signals? And let's look over here. We have absolutely no sectors, not even one, with a bullish crossover on breadth. Not even utilities, not even staples. Nothing has bullish breadth. This is measuring how many buy and sell signals it has in that sector. And it's getting less and less uptrends, more and more downtrends. So Joe, my takeaway here is do not get into this market right now. I mean, you can do whatever you want. I don't care. It's your money. I'm not going to tell you to sell your SoFi shares, but I'm telling you right now, our plans right now would have us say plan M and A are off the table. And plan ETF is also off the table as well, because we don't have an uptrend in anything. We don't have buy signals in anything. So again, there's no trades to be made other than sitting in cash and not effing up. Now, I know that can be boring, but to what Anthony said earlier, we're sitting in cash and earning 4.3% APY risk-free in the meantime. Risk-free in the meantime. These are short-term, ultra short-term 0 to 3 month bonds that we are basically buying the bond market, and we're getting paid daily interest in SGov. Pretty sick for me, in my opinion. What do you think, Joe?
Yeah, exactly. And I noticed a little hack. It's only worth a penny, but I noticed a little hack the other day. I had to do a transfer out of SGov, and it looked like it was going between 59 cents and 60 cents, 159, 160, where. So instead of doing a market, I did a limit, and I picked the higher price. Boom, got it. Say, it's a penny. Why not, right?
Dude, I mean, if you got enough shares, the penny will pay for dinner, right? You're totally right, Joe. What you're describing there are resting orders. I use resting orders all the time. It is great, right? When you see the price that you want to pay, there's no harm in saying, I'll wait for it at 60. I'm going to close today, but if I can get filled at 60, get me filled at 60, and you can just put it out there. You can wait. Yep. Yeah, for sure. I love it. Skinny Buff Guy says, but Chris, I need to do something, and that's why we have these plans. Absolutely. I'm really glad you put that out, because this is a 360-degree, 365-day plan to get you in the market, to get you exposure, to get you into opportunities to make money. That doesn't guarantee that you will, but opportunities to make money in the market. And Joe brought up something this morning, or just before we started that, I said this morning. What was it, Joe, that you noticed?
Yeah, so in the live stream this morning, which I think you're pre-recording for next week, so watch for this video like the 24th, 25th. In the video, you mentioned your annual compound annual growth rate being in somewhere around the 40% range, right? But you went deeper and you talked about how you've had some really successful years, like 170% or something, but you also had some negative years, right?
Mhm.
And I think that was a really good insight into professional trading
Mm.
in that, you work your plan and sometimes the market doesn't play the way it should, right? So
Oh, yeah.
you're gonna have some downtimes. Those are the times when you back test, you make your plan better. But just know that if you keep working your plan and making it better, you'll have those successful years. And ultimately, over a 5-year period, maybe it'll turn out to be positive, as Chris has experienced.
Joe, I'm glad you brought that up because I think this is a really key aspect here that a lot of people, a lot of people who are new to the market, they don't grasp what it's like to be a day-to-day actual professional fund manager, right? So what I'm doing right now is I'm entering my results into ChatGPT, and I'm going to say, give me the compound annual growth rate. Give me the compound annual growth rate. Compound annual growth rate is a great way for you to measure the average returns over a series of years, right? And especially important when it looks like this. In 2021, my returns were 172%. In 2022, my returns were negative 20%. 2023, I was only up 5% for the whole year. And in 2024, I was up 92%. And every single one of these trades for years is in the outlier trading room. Every single one of these trades. When you add this up, all up, give me the compound annual growth rate. This is going to be somewhere around 43%, I believe. Let's calculate it using this. And 28.9. I didn't put this year. Hold tight. This year I'm going to say plus 2025 at 20, let's just say 20%. Let's see what that comes out to. Compounding annual growth rate 27%. Either way, 27%. I thought it was closer to 40%. It probably was closer to 40% earlier this year before I had a drawdown. But either way, 27% compound annual growth rate, right? While to some people, they would say, oh, that's nothing. For a professional investor to compound 27% every year is a big deal, a huge deal. You can do the same, and you can probably do even better now that we have plans M, plan A, plan ETF, and plan sit in cash and don't F up on your radar too. So I'm very excited about that. Joe, I'm glad you brought that up because most people think I need 270% this year to be successful. No, you really don't. You really don't. You really don't.
Exactly.
So
And
in the meantime, go ahead.
And just keep in mind, every time there's a downtime, that back testing is going on and the plan is being improved. And even if you're only improving your plan just a minuscule amount, boy, we said compounding. It doesn't just help you once, it helps you again and then builds on it again and again. So, take advantage of those downtimes.
Right. And last year for 2024 at 92%, I basically doubled my account in 1 year. In 1 year, I basically doubled my account. Now,
Mhm.
I hope that we can do that again this year. And honestly, I don't know where it's going to end up. I'm just using 20% as a ballpark. It could be way higher and it could be lower, honestly, because we can't tell the market what we're going to get paid. We can't tell the market how much we're going to get paid. And we can't tell the market when we're going to get paid. All we can do is be ready when the opportunities come. Now, we're already late November. So who knows? Who knows what it's actually going to end up in? But I really am hoping that you as an outlier this year have not blown up your account, right? Joe, did you blow up your account this year?
Nope. I still am batting. What do you call it? Batting 1,000. I've never blown up an account.
Dude, and that's the way it should be. And the way that happens is you come up with a plan with an edge and then you run that edge. Now, next year, I'm super stoked because we will be entering the US Investing Championship and I'm hoping to win. And if I don't win, I want to place as high as I can with all of you outliers. And it is going to be so much fun. I can't wait to do that. You know what else I can't wait for, Joe? For you guys to put hashtag outlier in the chat. That way I can give you some free merch. Let's see who our first winner is. I mean, we could start now. Joe, should I start with the winners now or should we wait till later?
Oh, I think we should run with it. Let's do it.
Oh, I don't know, Joe. I don't think enough people have put hashtag outlier in the chat. As I get my email to April already, I don't think enough people have put hashtag outlier in the chat. And I mean, if you think you did, you probably should do it just one more time to be safe. I mean, look at that. It's already growing. It's already growing. All these outliers being smart like that. Let's make it happen. All right. We're going to give you 5 more seconds. 5, 4, 3, 2, 1. There's 5 seconds right there. All right. So, oh, wait, I don't need to do it yet. I need to hit the draw button. Here we go. Who's going to be our first winner of the day, Joe?
Hopefully it's
First-
me.
No, you're excluded. And Brandon is also excluded. That's a deep cut. OVTLYR, very cool. This morning, Brandon was giving me some sass, and I'm like, listen, if Brandon comes up, he gets nothing. Wait. I get to do the thing. If Brandon comes up, he gets nope, that's not it. Nope. Look, it works really well whenever I'm a professional YouTuber and get it all wrong. Oh, and then it's not sharing sound. Son of a gun. You get nothing. That's what I meant to say, Brandon.
Nothing.
Professional YouTuber at work. Come on, hoodie for OVTLYR. Nice. I wonder what OVTLYR is going to win. I wonder what he's going to win and escape to Dallas. Ooh, the Rosewood Mansion. That's where I took my wife for her birthday in July. That place was gorgeous. Joe, I got the most baller ass suite there. It was so sick. It came with 2 butlers. I'm kidding you not. It had 2 butlers, and I was like, what is happening? Where am I at in my life where I have 2 butlers to serve me at the Rosewood Mansion on Turtle Creek? Okay.
I know where you are. I know where you are. You're an outlier.
Oh yeah, let's go. Let's see what OVTLYR's won. A slingshot hoodie. Let's go. Slingshot hoodie. Where's that at? Boom. OVTLYR is going to be sporting a slingshot hoodie, a $69 value. Yours 100% for free, Mr. OVTLYR. Congratulations to you. Slingshot hoodie.
I'm jealous. I want one of these hoodies. I've heard that it's awesome material.
Dude, the hoodies are great. They are great. I spent my own money to buy the OVTLYR flag hoodie. I didn't get one for free, right? I only need 1 butler. Let's see who the next winner is. And the only way you're going to win is if you put hashtag OVTLYR. Let's draw again. All right, let's see. Oh, and by the way, to claim your prize, shoot April email, support@OVTLYR.com. I'm also going to email her to let you know that you're coming. Ronald Carsdonald. He won our second prize of the day. Ronald Carsdonald, congratulations to you, my friend. Let's see what Ronald Carsdonald has won. Let's see, Ronald. Let's see what you won.
Hoodie. Come on, hoodie.
Hoodie. Let's see. We got an OVTLYR flag t-shirt. There ain't nothing wrong with that. An OVTLYR flag t-shirt. That's gonna rock awesome at Ronald's house. OVTLYR flag shirt. Congratulations to you, Ronald. Let's do one more live. And then we're going to go to our weekly winner circle where we'll give away 2 more prizes. Let's see. By the way, I've been giving stuff away literally every day this week. I don't know if anybody knew that. Every single day this week, I've been giving stuff away.
Awesome.
Let's see. NetHog. Oh, here we go. You ready for this, Joe?
Yeah.
This is my favorite part of giving stuff away, and it's how bad can I butcher these usernames. You ready? So I assume it's NetHog, but it could be Nathog, like Nuthroption. Nathog. Okay. It could be Ethan, but he spelled it wrong. Ethan WG. Thaw. Okay. The Nethod. Or about NetHog. What?
Gwettin.
Oh yeah. Gwethin. That's it. Gwethin. All right. Let's see what Gwethin has won. Let's spin the wheel over here. Nethog. Yes, there's Nethog right there. Gwethin, Nethog. Everybody all aboard. Let's see what Gwethin has won. You guys are so fun. I'm glad that I can play with you guys like that. And OVTLYR, you coffee mug. Let's go.
Oh, I gotta get it.
There it is. It's so big it'll fit your entire fist. And Joe doesn't have baby hands like me, so that is a big ass mug. Dang, dude.
It is huge.
Let's go, OVTLYR U mug. Joe, where did you get that OVTLYR U mug? I'm just curious.
I, as a graduate from Alpha OVTLYR University,
Did somebody say OVTLYR University?
Are you ready? Let's go!
Respect is earned. Respect is never given.
Joe. I wanted to do that so hard. I wanted to cut you off so hard.
You picked the perfect time. Well done.
Yeah, there we go. Okay, so Outlier University is our way to give back to you and teach you everything that you could possibly know about trading. You don't need to know what the SOFR rate's doing, any other baloney like that. I think it was absolutely a setup, Joe. Thank you for letting me do that. And here's the great thing about Outlier University. I hold nothing back. There is no paywall. There's no masterclass. There's no upsell. If you're an outlier, you can watch it in the live streams for free. If you're not an outlier, that's cool. We want you to be an outlier later on. So we give it to you for free on YouTube and it will live there forever. And some people, Joe, you might know a couple of them, charge crazy dollars, like $12,000 a quarter to give you not even half of what we are going to give you in Outlier University. And here's the deal. Here's the deal. Half of y'all are going to listen and it's going to go through one ear and out the other. You're not going to do anything. Half of y'all are going to listen half-heartedly, and then you're going to make mistakes, and you're going to come back and you're going to say, Chris made me so much over shares. And the other 25% of you are going to listen, you're going to implement, you're going to make generational life-changing wealth. So you get to pick. You get to pick. Which one of those are you going to be? But I do want to showcase, professional YouTuber, hold on. I do want to showcase some people in our weekly winner circle this week, right? Like King Arthur, which is actually one of my very favorite tales. I love the tale of King Arthur. Let's see. King Arthur says, thanks to Outlier, I shorted the market for the first time ever. He bought puts on PayPal and it's going nicely. Let's go look at PayPal real quick. PayPal is a beaten up stock, a hugely beaten up stock. Ugh, goodbye, PayPal. But you know what, Joe? If you're not in it on the best days of the year, you're going to lose out. It's up 4.3% today, Joe. Don't you understand? Time in the market beats timing the market every time, right?
Oh boy, yeah. I just hope that you can develop a plan that has some signals, because I think that'll work for a little while until it doesn't work.
Yeah, and to that point, right? You can be down 16%. Since the crossover happened, by the way, on a stock, and it goes up 4% in a day, and people are going to be like, we're back, baby, here we go. But you're still down a net like 12% on the stock. So congratulations to King Arthur for understanding the point of trading with the trends. Let's go to Senior Wahoo. Art, one of our Bravo students. What did Art say? Let's see what Art says. Oh, here we go. I checked the Outlier dashboard to run the screener every day, which is part of his plan. Last week, all 9 lit up on PR. What is PR? I don't even know what PR is. You know what PR is, Joe?
Nope.
It is the Permian Resources Corporation. Well, that Outlier blocks all day for that, but that's okay. Let's see what Art did. Where's my Discord tab? Here we go. It was great liquidity at the 80 delta. There was an order block. Ooh, that's what he's talking about. But it was greater than 2% away. Hang on, God, which tab? There we go. He used the new position chart and he pulled the trigger. It ran up into the order block, so we got out with a 23% profit in 7 trading days. Now we're talking. He probably did this one right here is what I bet. I bet that's what he did. Yeah, did 10 over 20, price over 50. He got his buy signal. He let it run, right? He wasn't worried about this short-term order block. He was only looking at this older order block right there. He got that sell signal, which is plotted right there on the chart using the deep thought indicator. How cool is that? And this is not normal. That's not normal. I agree with you, Senior Wahoo. That's not normal at all. Congratulations. That was his trade. Very cool. Congratulations to you, my friend. All right. So let's read one more of these success stories. How about from Paul G? Let's see what Paul G says. I opened my it was right under Senior Wahoo. I opened my account this morning to see my APLD puts were down 20%. Oof. And out of the money. Oof. I heard Chris in my head say panic selling. Is that part of your plan? Yes, Chris. Sounds like Yoda in my head. Wait a minute. I got to read it correctly. Panic selling? Part of your plan it is? That was a decent Yoda. Chris sounds like Yoda in my head. Anyways, stuck to my plan, and the option is back up over 25% now. So congratulations, Paul G, for following your plan. Your plan, not somebody else's plan, not panic selling, not FOMOing, but following your plan. And because of that, bro did great. So congratulations to you. Now we're going to give away 2 prizes for every 20 people who list their success over in the Share Your Big Wins. We give away a prize. So we're going to give away 2 more prizes from the best website on the internet, Joe. What's that?
Random.org.
It's the best website you've ever come across. Let's see who the first winner is. Number 1 is number 7. First winner is Jeremy Holden. Congratulations, Jeremy. You're our first winner. Let's see who the next winner is. Next winner is, oh, he can't win twice. That is random. By the way, here's a great thing about randomness. We don't know what the outcome is going to be, and it absolutely can be the same outcome twice in a row. Jeremy, you don't get to win twice, though. Sorry, bro. Let's see. 18. Number 18 is Plan for Trade. I love it. So Jeremy Holden and Plan for Trade. Let's see what those two gentlemen have won. Our audience is 92% gentlemen, Joe. This is definitely a gentleman. Let's see. Oh, there's Plan for Trade right there. Plan for Trade right there. What a winner. Okay. Outlier You Coffee Mug goes to Jeremy, though. Outlier You Coffee Mug goes to Jeremy. Outlier You Coffee Mug. There we go. And now let's see what Plan for Trade has won. One more spin.
Hoodie.
One more spin. Let's see. Plan for Trade has won a Sit in Cash and Don't Have Up koozie. Listen, with Thanksgiving coming up soon and Joe getting absolutely tanked at Thanksgiving, he's going to need a Sit in Cash and Don't F Up koozie. And now you've got one. Don't F Up koozie. But you know what? Did you say I already did? I already pulled it once. And you know what else I'm going to pull, Joe? I think we'll pull, it's Thanksgiving. We're not going to do any giveaways next week. Let's pull 2 more winners. That sound all right?
Let's do it.
Let's pull 2 more winners. Let's see. I saw Brandon light up. Brandon, you get nothing, my friend. Dave, M66. Dave M66, let's go. Congratulations to you. Let's see what Dave's won. Today. I love giving away stuff. Isn't this so much fun to give away stuff, Joe?
It's a blast. I love Fridays.
I do too. He's got a Monkey Hammer t-shirt. Let's go, baby. I got one of those as well. Monkey Hammer t-shirt. Awesome. And let's get our biggest winner of the day. Who's it going to be? Hey, the Hammer, his t-shirt arrived just now. Sit in Cash and Don't F Up, baby. Let's see who the last winner is going to be. Better not be Brandon. It's Ozzy Ian, my friend, Alpha University graduate, Ian Belford. Congratulations to you, Mr. Ozzy Ian. How you doing, my friend? Good morning to you down under. Good morning to you from down under.
Chris says it better not be Brandon.
No, I'm telling you guys, this is now a thing. Because it's so fun to make inside jokes. We now will absolutely every single time if Brandon ever wins, he gets nothing. Just Brandon. Everybody else is cool. Brandon, sorry, bro. So effing close. I could taste it. I'm just playing, Brandon. I wouldn't do you like that. Hey, you know what? Ozzy Ian's got $10 merch credit. Ozzy Ian already has like all kinds of merch. Which is really funny. What's that?
I don't think he has a slingshot hat though, and I could see him wearing one of those.
I could see him wearing Outlier University hat and polos and looking like a rock star with his thumbs up with the Outlier screen in the background. What a great picture. Congratulations to Ozzy Ian. And congratulations to everybody. I've got RT Liner, Ronald, Nethog, Dave, Ozzy Ian, Plan for Trade, and Jeremy Holden. Is that 8 winners today? 7 or 8? This is great. I am so stoked to be a part of your day. This is the best thing that I've ever come across. I'm so grateful, and I mean this very honestly. You spend a lot of time listening to a random guy on the internet, and I want you to know just how much I appreciate you. Me and Joe and everybody at the Outlier team understand that you have the choice to listen to anything in the whole wide world of sports. But the fact that we are here with you, making this fun, helping you make money, learning together, profiting together, I couldn't be more blessed. Right. That is my Thanksgiving blessing to you. I'm so grateful that I can be a part of your day and, do the best that you can to share the word for Outlier. We are trying to change the world one person at a time, and we need your help to do that. So thank you all so much for coming today. Have a fantastic weekend. Next week, I will be live in the morning on Monday, Tuesday, Wednesday. Elsewise, I'll be out. Joe, I'm not expecting to see you until after Thanksgiving. So my friend, have a great Thanksgiving.
All right. Thanks, Chris. You too.
Thank you all so much for coming. I will see you very soon.